What are we expecting to find out from the third quarter earnings season in the States? In the first of a two-part series, we're looking at earnings from two aspects. First, in a broad sweep, then looking specifically at tech stocks, the part of the market that's seen the most upside over the last year or so. Well, joining us for both interviews is Paul Sedgwick, co-founder and CIO at Frank Investments. Paul, welcome.
Thank you, Jeremy.
It's good to be able to catch up with you. First of all, let's take a look at this part of the market which is not techs.
Okay.
What's the word on third quarter earnings?
Well, obviously you've got, look at the sector which they're expecting really strong earnings growth from is obviously the energy sector, with the recovery in the oil price that's taken place. Then after that it's materials, and then after that you're looking at industrials. So those are the areas where you're expected to see the greatest recovery in earnings this quarter. And then on the downside, you've got the area that we're thinking least about is sort of consumers, the consumer area, because this is the area that's probably had the biggest impact from input prices and being able to push them through into the to the end consumer. So that's where the broad picture looks. Overall, in the Q3, we're expecting year-on-year earnings growth of just under 30% for US companies. Tech is expected to grow about in line with that.
That sounds pretty good, but looking back, I think that's a little bit of a slowdown, isn't it? So the trajectory seems to be tapering off.
Yes, it is. But you're absolutely right. Obviously, we had the big dip in the second quarter of last year, and the earnings have been recovering. And a comparison, obviously, you're using a comparison from this time last year to this year. So it's a strong earnings growth, but you've got to take in mind the fact that obviously we had this big decline in earnings last year due to the impact of the virus.
First up on the sheet, of course, is banks.
Yeah.
Let's take a look at that because they begin reporting tomorrow.
Yeah.
From where we are at the moment in this interview. What are your thoughts on banks? You mentioned the consumer. The consumer does interact with some banks at some point, but of course we're talking here about internationally driven investment banks, really, aren't we?
That's right. So you're getting the big banks. You get Goldman's, you'll get Citibank, you'll get JP Morgan, all reporting in the next few days. They will start to set the scene for the earnings picture going forward because obviously they have a good insight into what's going on in the global economy. And a lot of analysts have got quite optimistic on the banking sector because they see yields rising in reaction to obviously higher inflation rates. So we've already seen that the Fed are going to probably start to taper their bond purchase program. Could send bond yields higher. You've also got the inflationary pressures could also send bond yields higher. Bond yields obviously are good news for the banking sector because they borrow short and lend long. And higher the longer end of the curve goes, this is good news for the banking sector. You've also got corporate balance sheets have been stronger recently, so obviously there could be more borrowing. So the outlook and valuations for banks are generally reasonably attractive. So they have performed well in the last quarter, but I think analysts remain reasonably optimistic on the banking sector in general.
But they've got rising costs. I mean, this is going to be something that's going to be a bit of a headwind.
A little bit, but I think that they haven't got the rising costs. They're going to probably have to deal with higher taxation, but so a lot of other corporations. But overall, I think that you'll probably see corporate borrowing increase. You'll probably see the consumers reasonably well placed at the moment, so you'll probably see continued demand from them. So I think overall the banking sector should pose a reasonably optimistic picture, but they will also have comments on the underlying insights into the global economy and the US economy in particular.
Quite often when we see earnings coming through on a broad sweep, we look ahead to Q4 and beyond.
Yeah.
How important is Q4 going to be to the Q3 earnings season for banks? Or rather, should we be looking at the earnings themselves and how things are moving at the moment rather than an outlook?
No, I think the outlook statement, I think this is a very good point, Jeremy, and I think the outlook statement is very important. I think obviously the Q3 earnings is a slightly backward-looking thing, and but what analysts and what investors are really looking for is what companies say about the outlook going forward, and if they're optimistic, and whether from their statements analysts are prepared to maintain their earnings forecast for the fourth quarter, become more cautious, which obviously can have a negative effect, or possibly become more optimistic. And as we talked about a little bit, there's a real pressure on margins from higher wages, higher input costs. So it would be really important to see what companies are talking about and seeing how that's affected them and how they see that affecting them in the fourth quarter.
One of the points well made is the fact that banks do benefit from higher interest rates, as you've explained quite clearly. But of course, higher interest rates are going to affect other areas, most notably, of course, the consumer. What about higher interest rates for companies outside the banking sector, not techs obviously, but how are they going to acclimatise to what we believe now to be the case, that the Fed's looking to raise interest rates in 2022?
Well, I think you've got to remember where they are compared to where they have been historically. So interest rates relative to where they have been are still pretty low, so pretty attractive overall. But obviously, it's another cost that's going to impact margins. I mean, corporate borrowing is going to become more expensive. Therefore, this will be an additional cost to companies going forward.
What about the consumer then? How is the consumer-orientated sector going to cope with higher interest rates and a consumer that's going to be increasingly under pressure?
Well, it's interesting because over the past year, I mean, consumers have been saving. Consumers are in a good position. They haven't been able to spend because they haven't been able to go out, and now they have that ability. So it'll be interesting to see, investors have got more bullish on airline stocks and consumer-related stocks, and we've seen trying to book a hotel in this country is virtually impossible. And you're now able to travel abroad a lot more, and you had EasyJet, who came out with a decent set of numbers today. So I think that it'll be interesting to see what the consumer does. Against all of that, there are uncertainties out there. They've got higher, their cost of living is rising. There is still the uncertainty around about COVID and all these sort of things. So it's an interesting dynamic. But fundamentally, the consumer has been saving. They have got the ability to spend if they want to, and that should be one of the areas that should help underpin the economy and economic growth in the next year.
Interesting. You mentioned EasyJet. Yes, out with a statement today on this Tuesday, and there's a lot of uncertainty out there. COVID, of course, is a really big question mark. Airlines, on the flip side, you mentioned energy prices rising. Of course, a large cost of the airlines is oil. If they've hedged right, then they'll probably be okay for the foreseeable future. Depends on how high oil goes and how quickly it gets there. But COVID, let's return to COVID first of all before we take a look at the cost of oil on companies' balance sheets. You can't ask anybody to get a sensible answer about what's going to happen with COVID. It is such a big unknown.
Yeah.
How of an important talking point is it going to be, do you think, to third quarter earnings for companies looking out from this point?
Well, that's a good question, and I was trying to think about that when I came here today. It feels a little bit like we're slightly moving on from that. The vaccination rates are going up. The economies are generally opening up. You've seen Australia's opening up, which has been one of the areas. You've seen the US is opening up their economy. We're opening up our economy. So it's a feeling that. Now, there is obviously an uncertainty as what will happen over winter if there's suddenly a big spike, and particularly in hospital cases, then obviously there is a risk that we close down the economy. But hopefully, I think there's a view that we're over the worst of it, and that obviously it's still out there, but that our economy is going to be shut down in the way they were a year ago. One has to hope not.
Yeah. What about the added drive from governments to try and push companies into going green? We've heard a lot about this, and we know it's going to cost money, and companies are having to gird their loins on this one, aren't they? Because they know the laws are coming to enforce more of a greener attitude to things, closing down on the carbon footprint. To what degree is this going to affect, and indeed which sectors is it going to affect most?
Well, I think it's going to affect, it's interesting because I think it'll affect all sectors, because I think there's no company is going to report of any note is not going to report and make some comment upon their ESG sort of strategy and how they're trying to deal with their carbon footprint. And obviously there are certain industries which are going to have a higher carbon footprint, industrials. You've got the oils in particular. And it's interesting because I was reading in some places that you've had oil companies have been focusing less on trying to produce oil and more and trying to work on their renewable strategy. So obviously that may have contributed to the sort of production in oil and this higher oil prices. So it's interesting. I mean, I think it is going to be a cost. It is going to be something that companies are focusing on, something investors focus on, and it will be highlighted in corporate results this quarter.
Okay, just to round up, I know you don't talk individual stocks, but we talk about sectors. Let's talk about the sectors of preference as we go into third quarter. What do you think is going to be the shining light in terms of sector preference coming out of third quarter?
Well, I think I mean, obviously, coming out of the third quarter, as we discussed earlier, energy stocks should come with pretty strong earnings. That'll be discounted a lot by the market. It'll be interesting to see how much the consumer side has managed to pass on their costs. I think, from my point of view, it'll be those companies that have been able to pass on the input prices as the best they can. That's probably the more defensive consumer sector. I mean, we know that, as we talked about, companies like sort of drinks companies have the ability to pass on prices because we all like to, we want to go to the pub, we want to go out and have a drink and these sort of things, and we can sustain those sort of things. So companies with decent pricing power, I think, should be able to do well and be able to pass on a lot of the rising input costs.
What about pharmaceuticals? We haven't really touched on that. We have spoken about COVID, but what about pharma companies? Some of them did very, very well during 2020, post-COVID lockdown and so forth, back into last year. So the comparisons are going to be very difficult for some of those companies. But again, you talk about defensive companies. I mean, that's a really good defensive play, isn't it?
Yeah, that is a very good defensive play, and obviously that's a very important point. But the interesting thing about pharmaceutical companies is it's been very COVID focused. So it's those companies that have managed to, those pharmaceutical companies that have managed to benefit's not the right word from COVID, but
no, I know what you mean.
Who've targeted their efforts towards dealing with COVID, and those are the companies that have done well. You've seen how Merck's share price performed last week. You've seen one or two how some of the other pharma, but other areas which have which obviously are doing more. What's the right word? More run-of-the-mill traditional, operations on knees and shoulders and that sort of thing, which have been put back. And obviously, cancer treatment's been put, as we've seen as well. So there's a mixed bag from the pharmaceutical sector, from the healthcare sector. But generally, right, it's always considered a very defensive sector. And there may, as we come out of the worst effects of COVID, hopefully, and some of the other areas might start to focus on in the pharmaceutical sector.
Okay, interesting, Paul. Thanks indeed for joining us with a look at the excluding tech stocks going into the third quarter earnings season. That's Paul Sedgwick, co-founder and CIO at Frank Investments. And Paul will be back shortly with a look at the tech sector in specific. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.